Hello and welcome to this Moneycontrol live stream. It's a Friday afternoon and we are just about knocking at the weekend. But if you look at the markets, it's pretty much been a range-bound session, and the Nifty has managed to shut shop above that 18,500 mark, and even the Sensex has gained somewhere around 100 points or thereabouts. But it was the broader end of the markets that deserves mention, given the fact that Nifty Midcap Index had hit a fresh lifetime high. Small cap index also gaining anywhere around 6 to 0.7%. So clearly this week belonged to the broader end of the markets, Yatin, given the fact that the Nifty small cap index, I think, is up somewhere around 3% for the week, whereas the benchmarks have seen a very flattish but positive close for the week. If you talk about today's market action, aside of Nifty, IT and energy pack, most of the sectors were in the green, and realty and PSU banks were the top sectoral movers in today's session. If you look at the Nifty gainers, you had Hindalco, Hero Moto on the back of good sales figures for the month of May. You had Apollo Hospitals, I think, extending its winning streak, and you had Tata Steel and JSW Steel Metals doing well there. On the flip side, Infosys, remember the shares went ex dividend today, so that stock is among the top Nifty loser. BPCL, HDFC Life down for a second straight day. Eicher Motors and Wipro on the losing end. IndusInd Bank also went ex dividend in today's session. So Yatin, if you want to talk about some of the mid cap movers, tell us which were the ones that were gaining and which were the ones that were the big losers.
So if you look at the markets, very action packed this week. In fact, as Nandita was mentioning, the mid cap and small cap indices are near life highs. So clearly strong sentiment playing up there. Despite the market volatility, we had the mid cap index which outperformed the markets. Graphite, HEG are the gainers in trade today, both of them up 10%, despite the fact that the Chinese steel prices have been coming down. Globally, steel demand has slowed down. These graphite companies, which are essential raw materials for making steel, have been doing well. Apart from that, JK Lakshmi Cement as well as Nykaa, both of these stocks moved 8% higher in trade. What was not doing well is the gas stocks, MGL, Adani Total Gas and Gujarat Gas. All of these stocks down anywhere between 2 to 3%. Also, if you look at the markets today, wherein the momentum boys really did well, Cyient, Hoodco, NCC, PFC, Zenza Technologies, all of these stocks were at new multi-year highs, as well as gaining by anywhere between 3 to 5%. So the momentum really is in the mid-cap IT segment, wherein we are looking at few smaller companies doing really very well. In fact, Nandita, this week Nucleus Software, the stock from 600 is almost to 1200. So it has almost doubled in the last 5-7 trading sessions.
Right, since you were talking about mid-cap, IT stocks, the first stock on my list is from the mid-cap IT pack itself. I'm talking about Cyient. Now, this stock is up over 80% on a YTD basis. In today's session, it gained somewhere around 6.5%. Since the time it reported earnings, like a month back or so, it is up 35%. At a time when a lot of these IT companies have given CC revenue guidance in the range of mid single digits to low single digits, this company had given a 15 to 20% guidance for its CC revenue growth, and in fact it expects margins to go up by 100 to 200 basis points. A lot of the growth or revenues were coming in from the transportation end of the business, which is seeing a very good traction. In fact, management expects double-digit growth from its aerospace segment in FY24. The railway segment rather not doing that well. It has kind of bottomed out, but that is also likely to pick up from next year. The aerospace segment is due for platform upgrade in the next 2 to 3 years. But once that happens, it can translate into super growth cycle for this company. There was a lot of excitement about the change in management as well. It had elevated ED and the chief operating officer as the CEO of the company. His name is Karthik Natarajan, and there's a lot of excitement around that. Aside of that, if you look at the stock, it has outperformed its peers like KPIT, Tata Elxsi, L&T Tech, and all of these companies. But even then, it remains the cheapest amongst the lot, given the fact that the forward PE ratio is at 20x.
Okay.
But still, there is a lot of room for upside going forward. So this is one stock that is on my radar this afternoon.
Absolutely, and the other stock on my radar is Bajaj Finance. Now, you look at the NBFC space as well as the banking stocks, they are doing well. But if you look at Bajaj Finance, there were initial concerns when Reliance announced the demerger of Jio Financial Services. But now, if you look at brokerages, they have been bullish. Jefferies has a buy rating on Bajaj Finance. They have upped the target price by nearly 1,000 rupees, and the new target price is 8,310. Now, Jefferies believes that the company is likely to see a compounded annual growth rate of nearly 26%, 27% in the next 3 financial years. They do believe that return on equity will be 25%, supported by strong loan growth. Also, they do believe that there could be some serious decline in the cost of funds for Bajaj Finance in the coming quarter. So, let's see how really does NIM and the overall sentiment move up for the NBFC space, because the competition here is also moving a bit higher. But yes, Bajaj Finance, after being sideways for so many months and weeks, has started moving in trade on the back of this brokerage upgrade.
You know, I think when the results had come out for Bajaj Finance, I was reading the CLSA report, which was titled Kohli's Aggression but Dravid's Defense. So I think that defense has come into play, given the fact that this stock had underperformed the Nifty for the first time in 14 years last year, right? But now it has started coming back, because CLSA had kept its outperform rating on the stock with the target price of 6,600 or thereabouts, but now it is above 7,000. And as you mentioned, Jefferies has a target which is in excess of 8,000. So looks like Dravid's defense is coming into play when it comes to this stock. Well, when you're talking about Jefferies, I have another stock on my list that's called AU Small Finance Bank, and Jefferies has initiated investment in this counter and assigned 3% weightage to this stock. In fact, if you remember, Motilal Oswal has recently downgraded the counter, given the fact that it has seen quite a bit of a run-up ever since it reported its earnings. In the last 3 months, in fact, the stock is up quite a bit, I think in excess of 20 to 30%. Now, it believes, Motilal Oswal believes that the current risk-reward ratio is unattractive after the kind of run-up that it has seen. In fact, brokerages believe that near-term growth opportunities are already factored into the stock. But the fact is that the bank had reported a very good set of numbers. However, the margin concerns are weighing in, given the fact that, the cost of funds is expected to go up. Stock has been, as I mentioned, on a roll for the last 3 months, and remember, RBI had also approved the reappointment of Sanjay Agarwal as the MD and CEO of the company. It had recently hit its 52-week high, but right now Jefferies has added this stock to its portfolio, so that's a big positive coming in. However, the technical analysts that I have spoken to, they believe that it's time to maybe book profits and wait for even more correction to look at buying into this stock. But since Jefferies is betting big on this company, let's see how things pan out for this one.
And I think the stock has really moved after the RBI extension which was given to the MD and CEO. Let's see whether or not there are more legs to this particular rally. But what's not doing well is Biocon. Now today the stock slipped as much as 4%. Obviously the stock recovered intraday, closed nearly 2% lower. But there was some sentimental negative news which came in trade today. Coherus Biosciences, which is one of the competitors to Biocon's blockbuster drug Humira, has launched the generic version of this drug at an 85% discount to the list price. Now, the Reuters report suggests that this steep discount could probably mean that there could be some pricing war in this particular launch. The analysts did expect that there could be some pricing erosion to the tune of 40 to 50%. But yes, after the Coherus announcement of 85% discount on this particular generic, probably the overall revenues which were expected for Biocon to bump up after the second quarter could face some bit of headwind with respect to competition. Also, India Infoline, which is IIFL, had valued this drug for Biocon at 33 rupees per share, given the fact that it is a very high margin product. Given the fact that there has been some competition here, it would be important to see how really Biocon prices this product and how really does it penetrate the US markets, which are flooded with a lot of these copycat come generic drugs. Given the steep discount launched by the competition, analysts do believe that there could be some further valuation downside for Biocon. Stock already has been under pressure, but let's see whether or not Biocon has been able to really move forward with respect to these biosimilars.
Right, that's a bitter pill coming in for Biocon. Let's see how the road ahead looks like for the company. Well, with that, I think we've come to the end of this edition of Closing Bell. So from Yatin and me, thanks a lot for watching. Have a great weekend. And don't forget, if you have any feedback for us, leave your comments in the comment section below, and of course keep with Moneycontrol for all your other news and financial updates. I'll be back with the markets on Monday morning, but till then you guys have a great weekend.